In your recent monthly commentary, you mentioned that US regime change last November is not merely a change in political power, it is a fundamental reset of their geopolitical and economic approach, which has both immediate and longer term ramifications for the US and rest of the world. This fundamental reset of the world brings forth both opportunities and challenges. I would like to ask, what are these challenges and opportunities for India in the current context of tariffs and trade war?
Sure. So, very quickly, one could spend a whole day discussing the regime change, but if I were to sum it up in four different dimensions, the first is, I think, geopolitical. The US has been what is now referred to, we have been in a unipolar moment for almost 35 years, where there has been only one superpower. I think that one superpower is now worried about the emergence of a second superpower. And one of the things that they now are articulating very clearly is that they do not wish to have the role of being the global policeman, which has meant that they have taken up a disproportionate part of global defense spending. So this is something that they clearly want to pivot away from. It could also be because they now want to channel their military expenditure towards dealing with who they think is the bigger threat, as compared to where that spending has been oriented, which is Western Europe and the NATO alliance for the past 30 years. The second part is tariffs, where the argument is very clear. They are not happy with the trade deficits that they are running. But I would say this is a slightly biased view of the world, because remember, when we look at trade, we should look at both goods and services. The US runs the biggest services surplus in the world. They are also running the biggest trade deficit in goods vis-a-vis the rest of the world. So it's important to look at the consolidated number, but they are looking only at the goods number. They are looking at it as a loss to the economy. There's no point going into the economic arguments about it. This is their belief. Secondly, they believe that this trade deficit, which has arisen as a result of unfair trading decisions taken by other countries, has led to a hollowing out of manufacturing jobs in the US. So they have two targets: correct the trade balance, bring back jobs to the US, make sure that they have supply chain resilience in terms of national security. They don't want to be dependent on other countries for goods that they consider to be important to them because of security reasons. The fourth is fiscal. The US fiscal deficit, we've talked about this in earlier Equity Market Insights, running at about 7% of GDP. They want to bring this down. Some of this is being done through cost cuts, which is what Doge is all about, but equally maybe trying to rein in the spending on account of military, that they have got commitments to NATO. And of course, the way they are describing the tariffs at some point of time, it sounds like this is a tax revenue which can also help bring down their internal deficit. So it's about a more disciplined fiscal approach and tighter fiscal. I would say that is a good thing in its objective, though the means can be debated. Finally, monetary, they do want to see lower interest rates. And this is not only because they are now a debtor nation, but also, the fact that they believe their middle class constituencies have more debt than they have stock market ownership. And therefore, they would like to see, interest rates lower. Why does this mean opportunities and challenges for all countries, including in India? All these elements that I described eventually have an impact on every country in the world, because this has been at the heart of US policy for almost 35 years, some would say 80 years in the post-World War II environment. So it brings opportunities because India's relationship with the US now is much stronger than what it was at any point in time. So there is an opportunity for us to build on that. But there is also an opportunity for us to accept this challenge for what it is, and perhaps focus on making our economy more competitive, reducing red tape, attracting more FDI, because what we really have, in my opinion, is two very critical attributes. The demographics of India remain attractive, abundant labor force. And remember, as the fifth largest economy, most likely the third largest economy in about 3 years' time, it's also a very attractive market for companies who want to come in and manufacture to supply to this domestic economy. So to my mind, this is also a great opportunity to figure out how can we attract more FDI, how do we deregulate, how do we bring our tariffs down, because eventually companies that are competitive will find global markets for their products. And that is why I think this is a big opportunity for India. And it comes at an opportune moment where today our fiscal is in very good shape. Corporate balance sheets are healthy and bank balance sheets are also healthy. So, which is why I think it's both a challenge and an opportunity for India.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.